Doug Simon from Tredas is our market analyst this week. There were two major crop reports released last week. According to the USDA Weekly Crop Progress Report, good to excellent condition ratings for both corn and soybeans declined just slightly last week. Nationwide, 70% of corn was rated good to excellent, down slightly from the previous week. Last year at this time, 62% of the crop was rated good to excellent. Good to excellent condition ratings for soybeans also dropped 1 point to 66%. According to the USDA's August WASDE report, the 2018 corn and soybean crops continued to grow. Corn production was forecast at 14.6 billion bushels, down less than 1% from last year. Soybean production was forecast at almost 4.6 billion bushels, up 4% from last year. We talked with Doug on Thursday to get his take on the latest WASDE report, but began by asking for his analysis on the crop progress report.
On Monday, both the corn and the beans dropped 1 point. The corn dropped to 70% good to excellent, and the beans were down to 66% good to excellent. And seasonally, that was expected. Crops are starting to mature, and especially this year, we're ahead of pace on corn maturity, and the beans are they're about right on pace. But yeah, you tend to expect that this time of year. But the big thing is where we were last week in the WASDE report, and the NASS, the National Ag Statistics, came out and said we had much bigger corn yields than what they were thinking, earlier in earlier reports. So the yields bumped up quite a bit, and they took the corn yield up in that report up to like a 178, and they took the bean yield up to 51.5. So those are big bumps up, about a 4 bushel increase in the corn bushel yield and about a 3 bushel increase in the soybean yield.
I understand that there were some farmers who weren't very happy about those numbers. How accurate do we think they are? It's a little early to tell, maybe?
Earlier, the market was thinking more towards 180 bushel yield on the corn 6 weeks ago. So I think that corn yield number is believable. I mean, there are some dry areas in the country, but from farmers telling me we had a really good start this year, dry enough conditions when we planted, that we got good populations, and that's what USDA said in that report, is that like the plant populations were up to 29,500, which is a record. They did use a little lower ear weight, but we'll see the actual field level tests, here coming up in the next report, where they'll actually weigh those ears. We'll get a better feel for what that is. The bean side of it, I think maybe bumping that up 3 bushels a little bit early to do that. It's been a little drier up in the main kind of soybean growing areas into August. And now we have been getting some good rains here the last few days, and the forecast for next week are good rains. So that may be potentially, may be able to reach that yield, that level, but it seemed to be a little bit high to start with.
And that report had a little impact on the market?
Definitely did. Soybeans were down 40 cents. When you go and you add 3 bushels over 90 million acres, you add 250 million bushels to your carryover on the soybean side. And on the corn side, we added 4 bushels over, again, call it 81 million acres harvested. You added 320 to 350 million bushels of your carryovers on both the corn and 250 on the beans. That was a big shock. I don't think the market thought we were going to be quite that high that early. The
last time you were on, you said the balance sheet for corn was looking pretty good. Do you still feel that way?
Yeah, they did bump up the exports on their last report on the corn side, and so the usage numbers were a little more optimistic and kind of ate into some of that increased production. So you've got the carryover still just under 1.7 billion bushels, which is definitely tighter. Last year at this time we were thinking it was 2.5 billion bushels. The world numbers on the world carryouts in that 155 million metric ton range, which is down from 200 a year ago and 230 million metric tons 2 to 3 years ago. So the world numbers have definitely tightened up on the corn balance sheet.
Okay, so things looking pretty good for corn. Let's talk about soybeans. There's a lot of things that seem to be impacting soybeans right now.
Well, if the corn balance sheet looks attractive, the bean balance sheet, both the U.S. and the world, looks terrible. We haven't seen this abundant of a sheet, balance sheet since 2007. The numbers with that increased production and lower exports because of the things that are going on with China definitely made that balance sheet swell up to like 785 million bushels, which is quite a big jump. So the world numbers are also pretty abundant. So when you look at that, prices were down 40 cents on Friday. Now we've had a little bit of a rebound this last few days, and especially on Wednesday evening, they actually announced that there's a vice commerce secretary from China coming to the U.S. And so that's actually really good news, because there's been no talking going on. There's just been escalating tensions between adding tariffs, and so this is a first signal. Now that's on the commerce side. It doesn't involve the U.S. trade representative, which would be more important for the agriculture side. But to have the first glimpse of talks is is positive to the market. And beans are up 29 cents on Thursday morning because of that. But when you look at it, I think there's going to be a lot of political pressure and economic pressure on both the U.S. and China. China exports a lot more goods here than we export to them. They have their economy. You look at their stock market; it's fallen pretty, aggressively. Their value of their currency has dropped pretty appreciably. The U.S. stock market's in pretty good shape, but we have a lot of political pressure here with elections coming up in the midterms, and so I think both of us have a lot of things at stake, and so I think it's good that they've taken that first step. When you look at that worry about exporting those soybeans to China right now, the market kind of had a panic last week in terms of cash basis levels, because if we don't load trains to the PNW, the Pacific Northwest, those beans are going to stay around here, maybe not go into the Gulf, or they'll definitely go into the Gulf, but there's going to be more beans staying around here, which has impacted the corn and the bean basis levels last week, which was important to look at.
So what are you telling people now? What should they be doing over the next few weeks?
I think the most important thing is be looking at, for harvest, what are you going to store, corn and beans. The corn basis is still relatively good into a lot of processors. So if you have to move corn and beans, in some regards, I think moving the corn right now looks attractive. The bean basis, being 75 under at Fremont ADM and 70 under at ADM Lincoln, is relatively, weaker, I think, relative to the corn. I think there's probably some interest in storing that corn. If you look at the carries in the market, though, there is carry. There's like 44 cents a carry in the soybean market out to July, and there's about 24 cents a carry out in the corn market. So you want to be able to carry that stuff away from harvest as much as you can. In terms of pricing more, the funds are short probably 50,000 contracts of beans. Are pretty negative. They could get a little more negative. On the corn side, they're short probably about 30,000 contracts of corn. So they're still a little bit more negative. When you look at going into next year, there's a thought that we might, because of this trade war, I've heard up to 7 million acres of corn. So that's going to add 1 billion bushels to the carryover for next year and put a little bit of a damper on 2019. I guess at some point when these funds get more to the long side on the corn and beans, we'll be more interested in selling next year's corn and soybeans, and then make sure we sell more of what we got this crop that we're raising.
So right now we're in a little bit of a wait and see, but we're going to have to make some decisions.
Basis levels, I think you have to really take a hard look at that, and especially if you got to go to town, because we're afraid that we may get backed up and there may be filling up, and you may not have a place to dump. So you may want to get some of that stuff contracted now so you have places to get into.